Okay. Okay, so we had this is February, okay, we had two important reports, CPI, PPI, and consumer prices were up hotter than expected, and so it seems like our inflation is going to be around for a long time, and it's not really going off as fast as we'd hoped. So that means, and there were some Fed officials that said they suggest raising rates higher than 25 at the next meeting. So that's really bad for the stock market. For a long-term investor, it's basically a period of time, maybe the next 6 months to a year, where there's no growth to negative growth be expected for some of the major companies, because everything in earnings for companies has a direct correlation usually to the economy. So that was a bad thing that happened. But let's go through some of our talking points. The 10-year and the 2-year both were up 4% this week, and a lot of times when the 10-year and 2-year are up, that means the stock market goes down, and that's because the Fed always follows the 2-year. So if the 2-year is going up, the Fed is going to raise rates higher, and if the 2-year goes down, then it's opposite. It won't raise as much. So it's basically indicating that the Fed is going to be raising interest rates and holding them longer than normal. And we were talking about this earlier today about the reducing the balance sheet, how it's number 3 on our list every time we look at this, because it has a 1-to-1 correlation to growth in the economy. So, and it's like raising interest rates every month that it reduces this balance sheet. So someday, maybe next year or 2 years from now, the Fed will be adding to the balance sheet, and that's like reducing the interest rates. So whenever that happens, we'll know we're in expansion mode, and usually stocks in the market go up.
I guess, yeah, I forgot that we've been talking about this here, but I feel like the interest rate changes get a lot of press.
Yeah.
But the Fed balance sheet, if they're trying to roll off 30 to 60 billion a month, what they did before, I guess, is they rebuy, and now they just let it expire and don't rebuy the bonds as they mature. That is a significant portion of their kind of asset inflation fighting. I don't know how much of an effect this has on end prices for real products, which I think the general interest rate has some more impact there. But this seems like it would really reduce asset kind of bubble that they've kind of inflated.
Right. Well, I guess they basically more than doubled the balance sheet for the pandemic just so the economy would not collapse. And, they gave support to the economy, and that was like I guess a one-time, they didn't expect it to last this. It worked. The economy is still strong right now, and I think the economy can still manage that reduction for a while. But, for our purposes, we can't get our high hopes. We can't get high hopes that the stock market's going to be back to normal anytime soon. We just have to understand this is a time where, we're not going to have as much economic support from the governments.
And they have a bunch of mortgage-backed securities in there. They've got $2 billion in mortgage-backed securities, I think. 5.7 trillion in treasury securities. But those mortgage-backed securities, I think that's going to affect housing prices, right? This is it affects the housing interest rate, the house interest rates, and I think that all sorts of assets can be affected as they try to decrease that. And they don't know what that does. Jerome Powell, a year ago said, we don't know what this does. They started doing this in 2018, but they're going to try to do it faster now. We'll see.
Yeah, so that's kind of this whole situation where the interest rates are going up. You have reduced balance sheets. That kind of gives us that next 6 months or so to a year. It's unpredictable because, like you said, we have no idea what all that's going to cause. What effect that's going to have on all the stocks we're watching. It's like an unknown. So everything that used to grow at 10%, 15%, like Google's growing at 14%, will it? Maybe not. I mean, in the next 6 months to a year, it's just a big experiment. So if it does, not like Google has been giving some bad reports recently, for instance. But I guess you have to keep in mind that this is like a mulligan. There's a lot of companies that are stuck in adapting to this environment, and so my guess is in a year or two, they're basically going to recover to their prior highs. Not prior highs, but their prior growth rates. So that's kind of my theory here, but we'll see. So it's an unpredictable situation. Most companies are dealing with it okay. I mean, they're not collapsing in their earnings, and their earnings are decent. Okay, we have a holiday coming up Monday, so that's February 20th. A lot of times people are. It's too bad I don't have access to the internet. This is really weird. Hold on, I'm going to try this one more time.
So one thing I was going to say about the kind of the central bank balance sheets, if you've looked at Japan the last many years, for a while there, I don't know if they still are, that the Japanese central bank, the Bank of Japan, was actually buying equities. They had a balance sheet. It wasn't just bonds and stuff. They were actually buying equities and had become a significant holder of equity value, which will definitely throw off valuations.
Even the U.S. government also buying equities of your company when the downturn, Lehman and stuff, and they still haven't finished dumping the all of them yet. Right?
I'm not sure.
I don't know about that.
Yeah, Treasury issue some report regularly, and there's still a lot of equities still on the balances.
Oh. Well, I guess that's something I'm not too sure about. Okay, we got. I don't know. My Chrome is like out of action here, so I'm not going to use Chrome this time. Let's get that Chrome out of the way, and we'll use I said Netscape. We'll use Firefox. Okay, so the stock market's down. Our formula, has been 10-year, 2-year. If it goes up, stock market, it's not good for the stock market. The stock market is going to go down. And I think that was the biggest news story this week. What else? Yeah, the information about the PPI and CPI freaked the market, having stronger than expected inflation numbers. So that's all something we have to deal with and try to figure out how it affects the stocks we're watching, and if it's temporary or permanent or whatever. But whenever interest rates go up, tech stocks like the NASDAQ, they'll go down. And then there's a switch to more conservative dividend-paying stocks. So we've been doing that all year long. We've been switching from what worked last year works this year. What didn't work last year works this year. What did work last year. So every day it's like that now. So I'm going to have to, let me see.
Is it really a one-to-one match? Because, the environments are really different between last year and this year and the 2 years before.
Let's look at I think today is like, if the stock market's down, a lot of times people run for things that are more conservative, like dividend-paying stocks and conservative stocks, like drug companies or... So drug companies have actually not been doing so well compared to the rest of the stock market.
I do wonder, I think that when rates were so low, a lot of people were in dividend stocks looking for yield, and if they can get yield elsewhere, that might, have its own impact on dividend stocks.
Yeah. Oh, yeah. So there's a less of a demand. If you can get a short thing for 5% yield, why take the risk and own a stock that pays 6%? Because, and that's kind of what we were saying at the beginning of this year. This is, between February and August will be a peak rate situation. So if you do want a certain portion of your portfolio to be secure, like between 4 and 6%, this is the time to start dollar costing into those, like for instance, treasuries or whatever it is, because those rates won't be here like next year at this time. That'll probably be going down. So,
and I think that in terms of yield on equities, the REITs, I know a lot of people were in REITs for yield, and I think that some of these commercial real estate trusts might have trouble here keeping leases depending on their location and like the office buildings they own and things like that.
Right, like companies that are allowing remote activity, are they going to renew their leases? New York City is like ground zero for that, because how many companies are allowing work from home and downsizing out of the expensive markets for that kind of activity. I don't know.
It's even worse in San Francisco, but yeah.
Oh yeah.
The number of empty offices.
So I think even someone like Elon Musk on Twitter, I think he's trying to get out of some leases. I'm not sure, but right, yeah. So that's pretty much a dangerous. It's out of my realm to understand that mortgage or the office REIT situation.
Yeah. But if you filter by dividend, you'll see a lot of REIT companies, and I think some of that may be at risk. So.
Right. Even as the Fed reduces their balance sheet, there's what it's selling and not allowing to renew. Does that affect that market? I don't know. But that's the confusion and uncertainty. So when we talk about the uncertainty, that's really important. That you got to be confident in your holding, and you got to be constantly reevaluating your confidence level. And I guess the confidence level for those kind of REITs are going down, and a lot of times the prices go down with the confidence level of the general public. So let's look at inflation is not getting better. It's had a hotter than expected this week. That's not good. And we're overbought still. We're going down in our stochastics. So if we look at our stochastics for the S&P, you can see that, we peaked like right around here, and we're in the process of going down. When it gets down to here, we're going to have fear in the market, and people will be selling. But on the good side, we're seeing like higher highs, higher lows, and we've broken out substantially out of this. And it looks like the next stop is going to be right here. And if we can maintain some momentum, we'll be up here. But right now we're at 70-ish for our stochastics, and that's right like in the middle of our channel here. So if we get some really bad news, some kind of bad news, we end up going back down here or down here as the first stop. So that's just keep that in mind as we're going through these. Okay, so we're currently overbought, going down. We're still, I think this is, we had a run on tech stocks. A lot of tech stocks went up 15% year to date. So the NASDAQ, QQQ. So now we're coming into a more uncertain period where the interest rates go up, and we don't know how that's going to affect those tech stocks, because they've already there's been a big short covering situation. Let's look at this chart again. Okay, so we had a whole year basically of these lower highs, lower lows, and fell right within this channel, and right here, the market, we had a good portion of the hedge funds and market that were betting against, going up, breaking out of here, and they had this short covering. This whole move right here was a big portion of that was short covering. It was like the biggest short covering rally since the meme stocks of last year. We'll go over that article a little bit later, but Goldman Sachs keeps track of the shorts, and they mentioned that that's probably what happened and why we had such a big blast out of this downward channel. So that could have been like artificial. It could have been just hedge funds having to cover their positions, and we just have to keep that in mind as the reason. There's nothing fundamentally different about the companies from the beginning of the year to now. They're just up 15% or more. So let's look at, all right. Okay, crude is down 2% since last week. There's not really that much news. Actually, the reason it's down is the United States government said that there would be selling more of the strategic petroleum reserve. That increases supply. So when you increase supply, the price of oil goes down. So all the oil energy stocks are going to go down with that news. So that was why that happened. And energy is probably one of the only sectors that are still in an uptrend here. Let's look at from last year. Look at that energy sector. Okay, look at that. So you can see even from last year, this was the only one that was performing, in higher highs, higher lows. Right now, we're basically touching the bottom of this range. That news, that was pretty bad news, but in stochastics wise, we're halfway between overbought and oversold. But it still seems to be in a higher high, higher low environment. Whenever it breaks this down to here, then we know it could be trouble. But okay, so a lot of times whenever you have the price of oil go down, there's activity in the Mideast and people get scared of supply and then it goes up again. So I don't know if that's manufactured or something that just happens. So inflation, it was a little bit hotter. It's still at like 6.5%. And the dollar is starting to go up some. Like this week it went up. So the downtrend for the beginning of the year, that's not going to be good for multinational companies. Let's look at that. So you can see we're still in this downtrend in the dollar, but we're at the top of this channel. And if we end up going higher in the dollar, that's going to be bad for most of the earnings reports for the big companies that do business overseas. But this is a direct correlation, though, to the materials like gold and silver and copper, etc. So this is very important to keep that in mind. But we're still in this downtrend. So until we break out of that, that's going to be really good for the multinational stocks if it keeps going down. All right. So I guess that's another reason why the stock market might be going down this week is, if the dollar goes up, it's bad for the earnings of the stocks. So it's okay. So now let's go to look at the sectors. I can't. I'm going to have to look at this on. For some reason my Chrome doesn't work. It's necessary. Oh, it doesn't work anymore. All right, let's see what's up and down. Okay, so oil stocks are down the most, and we mentioned the Strategic Petroleum Reserve selling their oil. That makes sense. Home construction, with the interest rates going up this week, 4%, that's going to make the demand for housing go down. So, and then the housing manufacturers have to cut their production, etc. So, semiconductor, all the tech stocks are going to be hurt whenever the interest rates go up. With the inflation report, that hurts them. That's what I bet you the best performing are the more conservative ones, consumer staples. These are the ones that worked last year. So today's another one of those days where things that worked last year are working this year. And most of these sectors are down for the year. They're actually been thrown away. And now these two things, the inflation scare this week and the with inflation and the oil going down, you're losing people out of the oil into more conservative stocks. So it looks like my guess is this year is going to be it's going to be really hard for tech stocks to go up in a high interest rate environment that stays high. So it's probably going to be flat or flat to down, even though it's up 15% this year. So today's another one of those days. What worked last year works this year. And let's look at we have to go through. Okay. So last year we had a theme of, so we had a lack of production out of Ukraine for grain, etc. So that led us to think about how the tractor manufacturers, etc., would have to sell more in order to meet the demand of the world. So maybe the farmers in America will be buying more of that. So that's a theme. What else is happening? Okay, so drug companies, conservative companies that pay a dividend, that's what's going up today. So healthcare, and the ones that are doing the worst are the higher PE ratio stocks and oil stocks. So that's what happened. Okay, so now let's look at the NASDAQ. So, all right, so all these are drug stocks. T-Mobile, it's stock that worked last year. These are all stocks that worked really good last year, and they were thrown away until this time in this year. So let's look at the ones that are doing the worst. All the high PE stocks. So we have Datadog. These are ones with sketchy earnings. The ones that went up a lot during the short covering, now they're being sold off. So that short covering was only lasted so long. Now they're basically they're being sold off after people. I think they call it profit taking. Once you've made double your money in 2 months, people start taking some money off the table. So that's the theme there. And people are getting away from high PE stocks whenever the interest rates go up and into stocks with lower price to earnings ratio, lower valuations. So we have that on and off. Every time we look, it's either... Okay, so let's look at the companies doing great in this environment. They can raise prices in an inflationary environment. They have profits now, and they do well in a right. Okay, low PEG ratio stocks. These are the ones that are doing good today. Safe business models. All the healthcare that people aren't going to cut corners on their healthcare. Low valuation stocks. So stocks that are closer to a PEG ratio of 1 will not go down as much. Have a PEG ratio of higher than 1, like 5 or 6, then they're being sold a lot. Time to look at high-yielding stocks, and during this next 6 months, like I was saying, it's time to look at those high-yielding stocks, high-yielding bonds for that part of your portfolio. And, okay, let's look at, all right, that was a good exercise. It's good to do that every now and then. Okay, so we're basically right here in our channel. We're either going here and back up to here, or we're going to go back down to here, and no one wants that, but it's a possibility. So, good time to review, our expectations for this year. So Dan Niles and Leon Cooperman both think there's a pretty good chance we're going to be sideways and or in this range. So right now we're about right here. So fair value for the S&P is about 3,000. So not a good time to get over your skis. You have to assume that we're basically going to be in this range all year long. So for me, I know this year is going to be like it's a zero growth to lower for the stocks I'm holding. But after the end of this year, maybe next year, we're going to have a resumption of the growth that we had before. All right, the Fear and Greed Index. It's people were much greedier last week. Now we're going to go down. We're going to go down as the stock market goes down. We're going to lead this more to fear and extreme fear. So extreme fear is when you want to start looking into buying things, and the greed is whenever you want to try to unload the things that you don't want and or don't buy. So that is something to remember. Now, VIX is, let's see what the VIX is now. With the stock market going down, VIX is probably going up. Let's look at the VIX again, just because it changes a lot. VIX. Okay, so it's up 1% today. It's not a whole lot. All right, so that kind of matches what we had before the market started. Okay, so people are still, complacent. So if we look at the 20, that's like, it's kind of whenever people whenever the stock market's up, people have a VIX of 20 and they're not buying protection. They're still pretty confident, but whenever the stock market goes down like 2 or 3%, and we're oversold in the market, that's whenever the VIX starts going up to 30. So, okay, what I did, we were talking last week about Ford, and I was looking at the, Tesla and Ford, and I got some good articles on Tesla, and I thought it's good to go over some of the expectations. There was some news came out about Ford this week that the battery on their truck, on their new Lightning trucks, electric, their new electric pickup trucks, Ford Lightning, I think it's called. They had a battery issue. They're doing a recall. So that there's a couple things that reduce our confidence in the stock. One is, if you're buying a higher priced vehicle, you want to have confidence in buying it. And now that there's recalls, you wonder if there's any other problems with these vehicles, seeing they're newer, and so they're having a recall, so that's going to affect earnings. And on top of that, you have some people that they're stopping the production of that vehicle. So, and not only that, they had to reduce the price of their line of EVs because Tesla reduces their price. So they didn't have the pricing power that I thought they would have. And if they have the country's best-selling vehicle, the F-150, I think it is. So naturally, so naturally you have a huge satisfied customer base that are ready to upgrade. Something like the Apple, iPhone. You have a 99% satisfaction ratio on the Apple iPhone, and they'll upgrade whenever theirs doesn't work or whatever, or where they're ready. And the problem right now is you have a lack of confidence. Let's look at that article. Battery investigation could take a few weeks and production remains halted. Okay, so that production halt is, they don't know how long that's going to take. That's very similar to our news about Boeing, how Boeing couldn't sell their Dreamliner. Was it Dreamliner? Well, one of their airplanes until it was certified. So, a lot of companies have these problems where they have to stop production, figure out an issue. And Boeing took a real big hit with that news. And now that we're looking back at that, if Ford goes down, substantially because of this news, it'd be very similar to how Boeing went down in half to 1/3 of what it was because of, customers lose confidence in your airplane if it crashes and, you have to have it recertified, etc. So, so this could make, Ford take a temporary hit until they figure out what the problem is. But any comments on that, Matthew?
No, that's good to know. I knew that I knew that the this battery thing, they're building like a new factory too for batteries. They just announced, so I'm not sure how that's going to impact this. But no, if you lose confidence of your buyers, that's really going to impact the bottom line.
Right. Okay. So and also it's not just buyers; it's investors. So if investors don't have faith that the company can produce a quality product on a regular basis and achieve their goals in their company, then the price of the stock goes down. So that confidence level in the stock, you really have to keep that in mind too. And if a lot of times they come out with, we think we can fix it in a certain amount of time, and that can help the confidence. So what I did was I went over the numbers again, just for fun. Okay, so the numbers that are posted, on this is E-Trade. It seems like they're only growing at 7%, 9%, and 5%. I went to get some fair value estimates from Yahoo Finance, from Merrill Edge, and from CFRA. They didn't. CFRA didn't provide. They're starting to not provide fair value estimates for companies because maybe they're liability purposes. I don't know why, but so it's getting harder to really know, what their true value is. So what I did was I did that calculation. They're only selling for a PE of 7. So in this environment with rising interest rates, the one problem with Ford is they have a lot of debt. They have a low PE ratio. They're only growing at around 7% if you average all these up. So they're growing at 7. Their PE is around 8. So they're basically fairly valued. And they pay a dividend of around 4%, 3.4%. So they're about fairly valued right now. The one problem is there's two intangibles. Will they sell, when will they start production on the Lightning again, which is going to be one of their best selling EVs? And if you raise the interest rates, they have to service debt. And I'll show you that in the next one. I looked at the numbers for Ford, and we know the PE is around 8. The PEG ratio is 0.85, so Yahoo Finance thinks it's growing at 9%, and its PE is 8, so it's about 15% undervalued. But look at this. The market cap is $54 billion, and we look way down on Yahoo Finance statistics, and it says the total debt is 140 billion. So the total debt is triple what the market cap is. So that's a lot of debt. So they, over the next couple of years, they're going to have to reservice that debt. And if the higher the interest rates go, that is a bad thing for Ford, because they have to spend money on interest instead of reinvesting into new battery plants, for instance. So they won't grow as much. So right now the return on equity and profit margins are out of whack because they had a loss on a recent earnings report. So we can't really, it was higher than this before, so we have to wait for that to even out to really understand that. But I did look at Morningstar. Morningstar thought their fair value was 20. So if they're growing at 9%, let's look at this. The PEG ratio is 0.85 according to Yahoo Finance. So if we do a calculation, the last price is 12.97 times 1. Okay, so Yahoo Finance thinks the fair value is 15, and because the PEG ratio is 0.85, and Morningstar thinks it's 20. Like I said, I looked at CFRA, and they give nothing. So they're starting to do this with almost more than half of the companies now, not give a fair value calculation. So that's not good. I don't know why, but that's not helping our valuations. All right, so in general, so I was looking at the big picture for Ford is you have a lot of competition, number one. You have Tesla as the leader in this industry. They're scaling up their battery production, and Ford's starting to do that. And I guess they don't have that quality down yet, too. So, and they're inconsistent. The one problem with Ford in this chart is, they're not giving good estimates for the analysts. They're not meeting their estimates. So things are coming up. So it's inconsistent. But if you look at the year over year, I guess, you have 34, 38, it's going up a little. So it's going up 7%. And the times that they had missed their quarter, it's usually the fourth quarter. So that's consistent, but it's not a growth story until they get like a groove and people start buying their new EV truck, and that becomes the best-selling EV truck in the country. I don't think they'll have a competition with Tesla, though, because Tesla's Cybertruck looks so stupid. I wouldn't want to buy that. Maybe some because if you're a guy in the country and you want to buy a truck to do things in your farm, you're not going to buy a Cybertruck, are you? Well, we'll see.
Yeah, the Cybertruck, they've got a new prototypes. They have been spotted. So I don't know when we're going to see the Cybertruck.
Oh, okay.
There has been new news on it within the last month or so.
Oh, I didn't see that. Okay, well, hopefully they'll fix that design. It doesn't look very cool to me.
I don't think they changed the design.
They cannot fix it, right? Because the material that they have used, the metal, it's not a normal car or vehicle material. This is a very strong steel. That's why it's all bulletproof, right?
Well, it's stainless steel, which is hard to form.
Yeah, exactly.
You can't make curves with it.
Yes, correct. That's why you have to just cut it in a line. There is no curves, as Matthew mentioned. So that's why I think it looks ugly. And I think you're right. There's no competition compared to Ford or GM. GM trucks. Because why somebody's going to waste $100,000 if they can get a nice, good quality truck for like 40,000-50,000, right, Matthew?
Yeah, I'm not sure of the what it's. I'm not sure where we're going to.
Yeah, I think it's just something. I'll tell you this. It's just something like this. Everybody wants iPhone, right? When you go like, hey, like I want the latest iPhone. Tesla is something like that, where you can deal with a normal Motorola phone or normal Google Pixel phone, but everybody wants latest iPhone model. Same thing with Tesla. Everybody wants something that new is coming out of Tesla.
The problem with the EV trucks, and there's been a lot of news on the Ford for this too, and I assume that the Cybertruck will have the same thing, is that temperature and towing, you can really reduce your range. Like if you start towing with, they say, oh, you can tow, 10,000 pounds, 12,000 pounds, but it's gonna, your range drops much faster than it would with kind of a regular gas truck, and I think there are real problems with certain truck applications. So if you're just driving it around the city, maybe it's fine, but if you're actually like wanting to have it do work, that's when it starts being difficult.
I think there's a quality issue with this. They got to figure things out. It's like it's like a beta version of this. I mean, I don't know. It doesn't seem very. I've seen those YouTube videos where, they try to tow something and then they have to recharge it, and I don't know. Yeah. I think it could be a year or two before they get it right.
Yeah, and this is gas vehicles, trucks can also have some similar stuff. So my truck, I have a camper. If I tow with my truck, I lose some mileage. It's not terrible, but my van it's certified. It's spec'd out to tow the same camper. But when I try to tow with it like more than halves my gas mileage. So I think there's things with like axle ratios and stuff. So like with gas vehicles and mileage with towing, that can be an issue. But with the EVs, I think it's even worse. So we'll see.
Right.
Tesla, aside from Cybertruck, it also have a cargo truck, semi. They're actually making a lot of progress.
The semi-trucks? They're making semi-trucks?
They're testing them.
They have a contract, or they have a couple of companies reserving and receive delivery. Pepsi, UBS.
Okay.
Right, so I guess we'll see how that works in their testing.
Yeah, they actually did deliver some in December, Tesla. I didn't realize that.
And the semi-truck looked really cool. I mean, that's the future of cargo truck.
Well, I think I totally forgot about it. Yes, they have semi-trucks. Oh my. Yes, you're right.
It has.
Yeah, I would like to try. Yeah, I think I remember that.
Let's look at that.
It.
Let's see what the Teslas
looks very beautiful though.
Okay, we're gonna look at this. Hopefully, isn't it? There it is. That's pretty cool.
Oh yeah. This looks like it's going into space.
Yeah.
It's gonna fly. Yeah, man, this looks nice.
One day,
that's not a real picture though.
What's not?
Is it? It doesn't look real. It looks like a rendering.
Oh, maybe it's a rendering.
But it does look a lot like that. But I don't think the thing it's towing will look like that.
Oh. Yeah, there's another video. There's a video.
Yeah, it's a real thing. There should be real pictures somewhere.
Yeah, that's why one down right there.
The fourth one is the real. Oh, okay.
Yeah, that's
clicked. Yes.
That's the second one, right?
Yeah, second, third, yeah.
Okay, that still looks pretty cool, I think.
It's actually if you go down to the next row, you see that they've been testing some of the companies.
Well, the big difference in look on all these electric vehicles is there's no air intake. They don't have to have a grill. They can just go to kind of a point. So it doesn't need the air for the engine.
Yeah.
Pepsi testing it, and UPS will receive deliveries.
Okay, so here's the Pepsi truck right here. Look at that.
That's not real.
Is that real?
It's maybe real, but I think it's a Tesla.
Right.
You mean Pepsi using Tesla truck? That's what you meant?
Yeah.
Yeah.
Okay. All right. So it looks like they'd have better technology. The Tesla would have better tech. If they could power a semi truck, they can make it an F-150 clone that has good performance. I don't know. So we'll see what happens there. But I think Ford is like right now they're struggling with this conversion to EV. I don't know if they didn't have parts last year, and now is the problem. And now they have the semiconductors. They're having a problem with their design. So so I don't know. It's very very similar to the Boeing and how the Boeing worked the bugs out of their plane, and now they're going up like crazy because they're getting orders from all over the world. They had like a huge India order yesterday.
Yes, they got like 200 planes. Yeah, that's a lot of order.
And so I guess
I think I was listening to I think Biden's thing where he said that they're about it's gonna give like 1 million jobs.
Wow.
Yeah.
For Boeing.
Yeah, because the 200 planes that India ordered, and that's just only one airline ordered that, which is Tata Airlines, and that's because they are upgrading all their planes, and I think they have money, so yeah.
So I guess the lesson learned with that is that Boeing. Boeing has a monopoly, a duopoly in the creation of large aircraft. Them and Airbus. So, whenever it was down, we were talking about this. We were saying that, it does have, they're not going to have competition, but, for a period of time, they're going to be, they have Airbus as the competition, but they're going to be in a period of time where they're out of favor in the market, and they just have to figure things out, and then they'll have a quality product after a while, and they'll have a monopoly again. Try later. Okay, so let's look at that. Okay, so this is whenever they're having the quality control problems. When this is, where is this? This is the pandemic right here. So next time we see a company that has a monopoly, that sells off like that. No other. Well, you have some smaller companies like smaller manufacturer of airplanes like Lockheed Martin, and they do military aircraft. I don't know.
Did you hear about Lockheed Martin and Raytheon? I think Raytheon is the right way of saying it. Raytheon.
Yeah.
I think China sanctioned them, right?
Yeah. Oh yeah.
They did sanction them. Yeah.
Retaliation of the balloon thing.
Yeah. And I don't know where did that balloon go. They did shot it. They didn't show anything. Picture. I don't know if they shot a bird or a balloon. I don't know.
All right. So let me see. Okay, we have a.
Why do you say monopoly, Greg? Boeing, main competitor is Airbus, right?
Airbus, yeah. Airbus, they have half the market and the worldwide market, and Airbus and Boeing share, the market for large aircraft. So
Greg,
it's a duopoly. I meant duopoly. So it's not like
because they have both in like passenger planes and armed planes. Then that's what you meant.
Oh, I'm saying that let's say 90% of passenger planes in the world are sold by Airbus and Boeing. So it's a duopoly.
Oh, okay. Yeah.
And so no other company is going to start manufacturing at the rate that Boeing is, because there's a lot involved in making those kind of businesses. So we should have started when it dropped. We should have known that they had a monopoly. There's going to be a supply problem for a while. They're not going to be able to have a demand until the pandemic's over. But next time we have a monopolistic kind of company, duopolistic, we should, just look at it as maybe a dollar costing situation, and then eventually figure it out, So
yeah, I did exactly check that when it went down. I bought some.
Oh, you bought some?
Yeah.
wow, that was an awesome buy, I think. So right now we're like, I have a couple more things to say. We're running out of time. Could you hold on for 1 second? Hold that thought for maybe that. Hold on. Okay. So let me see. Okay. So Ford, right now they're in that same period of time where they're losing some confidence in the investor, and if it goes down like in half, maybe it's time to start looking for that as a undervalued stock. But right now they're kind of fairly valued, and there's no real compelling reason to buy it right now, because the president was pushing this and saying, "Oh, this is the best thing since sliced bread and Model T, and everything's going to be great." And now we had supply, one thing after another, supply problems and now we have manufacturer problems, and then they have to reduce their price. So they got a lot of negative things. We'll keep watching that, and they have a high debt load, and this is usually when that gets up triple the market cap. That's a sign that if they have any hiccups, that could be a problem. So, okay, so we'll follow up with that another time. But here's another stock that I watched on a regular basis all the time. Google actually went down because of competition from ChatGPT. We were talking about this last week, and the more I look at this, right now they're oversold. Look at their stochastics; it's down here. This is usually a time when people are selling, and it's oversold, and it's a time to buy. And this is like, if we believe this chart, where it's in an uptrend here, what's happening today is every day people are going to be posting on social media. Wait till you hear what ChatGPT said, and the more all these negative things that, ChatGPT is not ready like Google is. Google search is like 99.9% good, and that's advertisers know that when they go to Google, they'll get a quality product. But if you can't put your advertising dollar to a ChatGPT that has weird responses, and maybe it might be bad responses that are negative for that advertising company. So that brings me to this. Google is still growing somewhere around 15 to 17%, 16%. The PEG ratio is around 1.25, so it's 25% overvalued. So the fair value is 76. If you divide the current price by the PEG ratio, so it's about fairly valued. But if you think about advertisers, are you going to put your money to Microsoft where you get a Bing search that says something negative about the person? Why'd you ask that question? Something random, or not reliable results. And so that's what happened this week. I think we're going to be seeing that ChatGPT is unreliable. The Bing search results are going to be, every day there's going to be a news story that says, until they get the bugs worked out, wait to hear what ChatGPT said, and then the advertisers are not going to leave Google for that. So, okay, so Google is still growing around 16%.
By the way, you're talking about Microsoft advertising. Yahoo search actually use Microsoft Bing, right? So Microsoft actually is expanding its market indirectly.
They're doing what indirectly?
Yahoo search is actually run by Microsoft Bing.
Are you kidding me?
Yeah. So indirectly, Microsoft is expanding its searching. Its search market.
Oh, yeah, it is. But to what extent? We don't know, and that's why Google is down where it is right now. It's a possible competition for Microsoft and that AI. But it's going to take a couple years for them to get it perfect. And Google's work on AI too. They have one of the biggest AI research facilities in the world. So I don't know. I think it's oversold, and it's still their earnings estimates haven't changed at all. So we see a fair value calculation around 93 for Google. So that's close to what we were saying based on their earnings projections. So and that's CFRA. So at least they give it fair value for that. So Kathy Woods, she's like the futuristic investor. She says that AI is going to take over, and Google is going to not have any. It's a warning for Google, this AI, but I'm thinking it's going to be 2, 3, maybe 5 years before AI gives you quality answers back.
Google never opened up its search engine, right? And who would know that Google doesn't already integrate AI into its search?
I'm sure it uses AI.
Yeah, so what her company may not be true because Google already applied AI into a certain products already.
Right. When I'm writing something on Gmail, it's filling out my AI. Yeah. So it does have parts of AI in its products now. It's just not making a big deal about it, and I know Matthew said that Google doesn't come out with quality things, but I don't know. Whatever for the products that I use on a regular basis, and 90% of the usage is search and maps and Gmail, stuff like that. Those are pretty fine-tuned products.
Oh yeah, no, and like the photo stuff is really cool, where you can search for a word and it finds matching photos. I use that all the time. I use lots of Google products, but yeah, they do have some things are really good. Yeah.
So I think that the big drop that they had in their stock is not. It doesn't make sense regarding they still have one of the best quality products out there that advertisers like consistency. They don't want a chat robot saying don't buy that stupid Tide detergent because or whatever, you don't know what the chat's going to say, and I don't know. I think the big picture here is you have these people saying these AI is going to take over, like this futuristic lady, but in reality, it's going to be a while for AI to really be 100%. So they were, and you can read this afterwards because I'm a little bit slow on time, but they're saying that Google's entire business model is that it leads you to a site and then you learn from there, but the AI basically tells you the answer. Where's the best place that I can get this product for the lowest cost? And then AI will give you the answer. And I don't know. So they're saying people are not going to search in the future. They're just going to ask their questions and get an answer. And that'll be 5 years, I think, before that comes up. But this is some news stories from this week. This isn't the only one. There's creepy answers in conversations with this chat GPT. And the more creepy articles that come out, the less people are going to go advertise away from Google to Microsoft. But the lesson learned, I'm sorry, go ahead. Okay, so the lesson learned here is Microsoft is trying to eat away at Alphabet search, very possibly because they don't want them to eat into their cloud margins. So Alphabet's losing money in Google Cloud right now, and they can't lose money in search and in cloud, so they might scale back in their cloud losses because they have to meet their earnings. So there could be something. There's a huge. I own both companies, so I think if it works out either way, I'm okay. But I'm thinking Google's going to win in all this because they still have AI. It's going to take a while for both companies to get the AI right. So, we were talking about car companies. One more article here. Kathy Woods said why she's buying, as Tesla went down earlier this year, Kathy Woods was buying every day. I was keeping track of that. And she thinks that this robo-taxi, anonymous taxi platforms, it'll have profits in the 80% range because you have a fleet of Tesla vehicles all over America that owners could allow to be used as autonomous taxis. And she thinks that's going to be the biggest moneymaker for Tesla. And on top of that, we had an article on Tesla where they're going to open their charging stations to other cars. So it looks like Tesla is not only could turn into like an autonomous robot company, taxi company. They can make the next ExxonMobil, for revenue. They're charging for their network of chargers. So maybe
good luck with regulator.
It's going to be like 5 years before they get that right. Right now they had that Super Bowl commercial where a guy that was a billionaire was saying, this Tesla self-driving isn't ready yet. And so right after that ad went, Tesla recalled all their self-driving, vehicle, software. So it's going to be a while before they get that together. But Kathy Woods thinks that's one of the most important things. So it looks like Tesla has a lot more catalysts in the next 5 to 10 years than Ford does. So so let's see how that works out. But I guess for me, I like to wait until it goes down to a PEG ratio of 1, like maybe $100 a share for Tesla before it's interesting. And this is one more article that Doug Cass, he mentioned the interest rates are going higher, and it's a direct correlation to equity prices. So here's a chart. As the treasury rates go up, the stock market goes down. The PE ratio that people are willing to pay for the stock market in general goes down. So that's kind of what's happening right now on a smaller scale, but it could get worse. So I think, I think that's it. The other thing is the 13F, that's every quarter, hedge funds and mutual funds report their holdings. So if you have over 200 million in assets, you have to report what you hold. So that all came out this week. It'll take a week for it to get into Yahoo Finance, but next week we'll go over the things that are changing in all the big mutual funds and the hedge funds that we're following. So that'll give us ideas of new stocks to look at. And we'll look at that next week. But that's about it. Sorry for keeping it too late here, but hope you have a good weekend, and thanks for coming to the show.
Thank you. Great.